Just starting off my recording. Hello everybody, my name is Ivan Asbel. I'll be taking today's webinar. Thank you all for attending. The webinar today is going to be about how to backtest systems in Seer. We're not going to be discussing, of course, the writing of actual trading algos, but we're just going to be discussing about how to backtest them. We're going to be discussing differences between backtesting, obviously, in Seer versus other platforms, and how to do portfolio backtesting within the Seer platform. So I'm just going to dive right in. Most of you that are watching this presentation, I'm sure, are pretty technically competent. So I'm just going to dive right in with some examples. First thing I'm going to do, I'm going to work on some of the examples that already exist within the Seer application. I'm going to click this Open an Account folder, and I'm going to browse to my My Documents Seer folder, and in there's some basic examples. I'm going to use this CCI example as my first example, and as you can see on the left over here in the tree, the CCI system has opened up. Now, most of you may know CCI is a type of indicator, right? It stands for Commodity Channel Indicators, and you can see there's some variables inside the system. There's a period and a back. Those are two variables that are inputs to the CCI indicator. And here is the actual code for the indicator itself in Seer. Basically, if there isn't already a position, we buy when the CCI is less than minus 100. If we have a position, then we obviously close based on certain criteria. It's a pretty basic system, and we're going to show how we actually backtest the system. Now, before we do that, I want to highlight a few very important tasks that need to be set up in Seer before backtesting. The first thing is that if one clicks on the name of the system that you're wanting to test, you can see that up comes some settings. And one of those settings is what we call a heartbeat, and that's currently set to 1 minute. Okay, 1 minute heartbeat. That means that this system will fire at the close of every minute candles in our data set. Of course, we can change it to whatever we like and push the OK button at the bottom, and that'll apply a new heartbeat for our backtesting. Okay. Now, of course, if you set some custom time frames within Seer, currently we have tick 1 minute, 5 minute, 10, 15, etc., all the way down to monthly. If you set for create a custom time frame, let's say a 13-minute or a 7-minute time frame, you could also set your heartbeat to 7 minutes or 13 minutes or whatever you feel like setting. But for now, let's just use the default of 1 minute. The next thing to check is your portfolio. So currently, I have one instrument in my portfolio that I'm going to be testing, and that's for Euro USD. And just a moment, after we do this backtest for Euro USD, we'll actually do a backtest. We'll add some additional instruments in there as well and see how Seer deals with multiple instruments. So those are two things, right? So the first thing is, again, the heartbeat on which you want to backtest. The second thing that we want to do is make sure we have at least one instrument in the portfolio. Okay, and the third and very important thing that we want to do is we actually want to set the time period over which we backtest. So the time period is found on the top right-hand side of the application, and if we click this button on the top right, it says basically edit dates and time bands. If we push that, we get a little window which is called edit date time bands, and in here we have our time bands that we can test on. Now you can see that I have a time band called full data set, which runs for my entire data set that I have installed on my computer, which is just over a year and a few months. And you can see it's visually represented here by this big blue line. And then I've defined a number of other data sets: a 30-day data set, a 1-day data set, a 6-month data set, and another test data set, which is just a few months in length. And of course, you can test whichever data set you want to test with. So this gives you the ability to define the data over which you want to test. right? So let's go ahead and actually create another data set, right? Let's say ranging from the start of our data set. Let's call it the 1st of June 2012. 1st of June 2012, all the way through to the 31st of April 2013, or the 30th of April 2013. And now what we've got, as you can see, is a new band from the beginning of our data set till the end of, till kind of the latter part of our data set. Now the reason I do that obviously is so that I can actually back test based on this data set, and then I can forward test on a different data set. So I'll call this new band, so we can call it my test band. And there it is, it's called my test band. Now I can select it from our drop down, and now what's going to happen is if I push the backtest button within Seer, which is this little button over here, it's got a $sign, a little green arrow, it's going to test it for the time period which is defined in my test band. Now this is obviously very, very important because it allows you to set your time periods for your backtesting and forward testing. We're not covering optimization in Seer, but certainly if you in this presentation, that's going to be in future presentations. But if you're optimizing your systems, then of course splitting up your data set between a backtesting data set and a forward execution testing data set is vitally important. So what I'm going to do is, now that I've set up all my parameters around my system, I'm literally going to click backtest, and you bear with me for just a moment while that works. Okay, so there we go. So now Seer has backtested my CCI system on about a year's worth of 1-minute data, and we've got some results. And let's run through some of these. Results now. So first we can see the speed at which Seer obviously backtested. That's about 17,000 bars a second. And the number of bars was about 335,000 bars on one instrument and one system. And we can see the result. We had a net profit of just over $7,500 dollars. Our gross profit and our gross loss, and some some interesting information. We have an annual return of 86.01%. The ones I like to look at are annual return. Right. Peak to trough drawdown, it's quite interesting. It had a 45% drawdown, so it's not ideal from a money management perspective, but still the annual return versus the peak to trough drawdown is about twice as much. So if you reduce your exposure, this could be a pretty good system. And of course, I like to look at things like the Sharpe ratio, although the Sharpe ratio in this instance is a little bit lower, 0.35. Now, of course, these are very basic analytics, which most platforms will give you. But now let's look at some other more interesting analytics. Firstly, most platforms in the market give you what I'm showing you here right now, which is what's called a trade equity curve. Now, many system developers will fool you and tell you that they have a great trade equity curve and this is a great system, let's invest in it. But a trade equity curve, if you speak to any professional investors, they'll say a trade equity curve is almost bordering on useless, actually, because it doesn't give you an idea of what your equity balance or cash balance is kind of within the trade, right? So on what's called a mark-to-market drawdown, which means that a trade equity curve is only representative of your cash or equity balance at the end of a trade, right, when your trade's actually being closed. But Seer gives you more information than this. Seer actually, if you click on equity curve on the right, it actually gives you a minute by minute indication of what your cash balance was at every minute throughout your trading history. Okay, so you can actually get a real indication of what your system did from a money management perspective and your actual exposure on the market, right? Okay, so if we go back to the trade equity curve, I want to show you some other interesting things. Like, for example, you get information like net profit by month, all right, for your system, so you can actually see what your returns are, or return percent by month. Okay, obviously this is just, it's in one of the example systems, so a lot of work has to go into the system, but you can see it's this commodity channel type product works pretty well in the FX market on Euro USD 1 minute pairs. Okay, so that's the basics to backtesting. Let's kind of go into second gear now and do what most platforms can't do, and that is add another instrument. Now what I'm going to do here is I'm going to add Euro USD and GBP USD. And now this is where most systems break down, because what most systems do is they run a system on each individual instrument and then try and combine the equity curves. Now, of course, equity curves, as I said before, are almost bordering on useless when you're looking to trade a system live. You need to look at the mark-to-market equity curve. And so Seer actually can do this on multiple instruments, right? So this is an example. I've got GBP USD and Euro USD, and what I'm going to do is I'm going to actually backtest this. Now bear with me for one moment while this happens. Okay, so now it's just loading some data. We'll be with you in just a moment. Okay, great. So we're back. So now Seer has backtested for about a year's worth of 1 minute data, 2 instruments simultaneously. And now if we go scroll towards the bottom of our results pane, you can actually see how there's been a contribution by symbol. So Euro USD has contributed $7,500 to the profit, and GBP USD has contributed also just under $7,500 to the profit. So again, we can actually go into our trading history and actually see what our trade equity curve was like. Looks like there's a bit slightly less of a drawdown over here in the initial parts of the system. Now, this is a really good sign, of course, because this is one of the primary reasons why why one needs to diversify one's portfolio, right? So if you just trade Euro USD, you would expect or one instrument, you would expect your Sharpe ratio to be low. You'd expect your drawdowns to be really, really high. And so we can actually look now, again, if you recall, when I was just testing on Euro USD, our annual return was around 85% or so, and our peak to trough drawdown was 45%. Now what we've done by adding GBP USD is we've taken our annual return to 172%, almost doubled it, and decreased our peak to trough drawdown by 36%, right? And almost doubled our Sharpe ratio from 0.3 something to 0.52. So just by adding one instrument into the portfolio, we have dramatically almost doubled the returns and halved the risk of the system that we're looking at. So again, you can click on trade equity curve and you can see the actual mark-to-market equity curve, or look at just the trade history to look at the actual trade equity curve or your returns. Okay. Now, if you think that's pretty cool, I'm going to show you something which is even cooler. Okay. So what I'm going to do now is I'm actually imagine we have multiple systems, right? So we have not only commodity channel index system, we also have another system. I'm going to open another one. What should I open up here? Okay, maybe an RSI. I'll open an RSI system. And here on the bottom here, you can see I've opened up an RSI system, and I'm actually going to copy this system. I'm going to paste it into my top system. I'm going to cut this trading object. Now, so what I've got now is I've got a commodity channel index system, and I've got a basic RSI system, right? And each of these, if you notice, can run on their own heartbeat and can have their own portfolios, right? So here I've got the CCI trading on Euro USD and GBP USD, and here I've got a basic RSI also trading on Euro USD and GBP USD. I guess I can add anything else I want to add in there. I don't know. Let's have a look. See, US dollar, Swiss franc. I like US dollar, Swiss franc. Okay, there we go. So now I have two systems here. Okay, now check this out. So now not only am I managing my risk over multiple instruments, I'm actually also now managing my risk across multiple systems. All right. So what I'm going to do here is I've selected my test band, and I'm going to actually backtest both of these systems simultaneously against the same cash balance. So that's the important thing here, right? Is that the systems don't have their own cash balance. The cash balance is actually done at a portfolio level, right? So I've got, let's say, $10,000 in my account, and the systems actually share one cash or equity balance. And this is very important from being able to simulate a real life environment. So I'm going to click backtest. It's going to take just 2 minutes. So bear with me while I go silent for 2 minutes while this thing backtests. Okay, so it's just going to take about a minute to do. And one of my co-presenters is telling me to reduce my time bands, but I don't want to do that. I actually want to show you kind of a longer term backtesting results. Okay, so here we go. So we've got some results. Now what Seer has done is it has backtested this commodity channel index over a year using Euro USD and GBP USD, and the RSI system over about a year on Euro USD, GBP USD, and USD Swiss franc. And now we have some interesting results. So we obviously have all the same results we've had before. Look at the annual return. The annual return is now 519% versus a drawdown of 53%. Okay, so obviously I've got to work on my money management a bit because 53% drawdown isn't good, but by reducing my exposure, I can see that my annual return is almost 10 times that of my peak to trough drawdown. And my Sharpe ratio now has gone up to about 0.97, so close to 1 on my Sharpe ratio. So you can see how by reducing my risk, increasing my exposure on certain instruments, diversifying across multiple types of systems, I'm really increasing the performance of the system. Now, the bottom over here, you can see that there's a contribution not only by the instrument, but also by the system itself. So the RSI is now contributing about 27,000 out of the 15-odd thousand versus the 15-odd thousand that the commodity channel index system is producing. Now, this is pretty cool. Now, what we can do is we can actually look at the trade history or the trade equity curve by instrument, right? So this is the trade equity curve by CCI. You've seen this one before. We can look at the trade equity curve of now the RSI as well, and now we can also see the trade equity curve of the combined instruments. So Seer has the ability to backtest single or multiple systems across multiple financial instruments. And of course, this gives it the ability to actually give you a real idea of what your exposure is from a cash and equity perspective on the market. So that is pretty much the end of today's presentation. It was a very brief presentation, but I hope you enjoyed it. I hope I've taught you something a little bit about backtesting in the Seer platform, and maybe also a little bit about the Seer platform itself. So everybody, I think, wait, before we let everybody go, maybe we can have take a few questions from the audience. Okay. Okay. So John is asking the question, can we try and forward execute? Sure. Okay. So John, so here we go. So what I'm going to do now is I'm going to set another time band. Okay. From, let's say, we had April, right? So let's go from the 1st of May until today. We'll create a new band for this, and this is, we'll call it forward testing band. Oops, I got the wrong year over there. Sorry, give me a second. I got the wrong year. There we go. Okay, so we can see the visual representation over here of the band that I've set. So I've got a forward testing band, so I can push OK there, and I can change my my Seer to basically look at the forward testing, right? So what I can do now is I can click on backtest, and that'll just look at the forward testing period. All right, so let's give that a moment. Okay, so we had forward testing over the last few months, right? So we can actually see now whether we've over optimized our system or we chose the wrong parameters, right? So our annual return is about, on this exposure, is 358% with a peak to trough drawdown of 61%. So it's annual return was 5 times more than our peak to trough drawdown, approximately 5 times more, which is very, very good. So obviously reducing our exposure would give us a very good system. And of course, we can look at our forward testing equity curve, and that's pretty much what it looked like. So John, I hope I answered your question about doing forward testing on that. I wonder if we have any more questions. So let me just open up my questions panel over here. Let me see if I've got any more questions. Okay, Bob is asking if I can actually reduce the exposure. Okay, so what we can do is, I have a starting capital of about $10,000 over here. What I can do is I can set the exposure of the different systems. I've got a little position size object over here where I can just change the position size. I can save that. I can also change the position sizing of my RSI. I'll just take a 0 off there. I'll reduce it by 10 times. Okay, and then what we can do once again is we can backtest everything again to see what our results are. Okay, so here's our results. We take small position sizes now. Our net profit is $931. Our annual return was about 22%, and our peak to trough drawdown 6.62%. And of course, peak to trough here is not on the equity curve; it's on the mark-to-market curve. So it's very indicative of what actually happened to your cash balance in the market. And I think that's the two questions we had. Thank you very much to everybody for attending. There will be a recording of this webinar coming onto our website, www.seertrading.com. Of course, the examples that I was talking about are all inside your Seer platform once you've downloaded it and installed it. If you have any problems, please email support@seertrading.com or ask a question on the forum. Thank you all for attending. Enjoy the rest of your day.